Alrighty. What's up? What's up? How you doing, everyone? How are we doing? Hope we're having a good weekend. If you guys can give me a sound check.
What's up? What's up?
Never mind. Got my own sound check here. We're good to go. Like I said, hope you guys are doing well. Hope we're having a fantastic weekend. And we're ready to get down to business here today. Got a lot of interesting things to share, not only from a short-term perspective, right, like a day trader's perspective, but also long-term perspective, right? Investing, swing trading, lots of hard-hitting insights for you guys this week. A lot of things changing within the market, giving new opportunities with the election behind us and the new year coming up. So I'm expecting a lot of excitement going forward, not excitement from a market standpoint of fast price delivery. And in my mind, the cleaner price action is ahead of us. So with that, let's go ahead and unpack that, see where we're at, see what opportunities we have ahead, and get down to the business. Wick, hello from Trinidad. Hello, hello. Michael, hello. Hope you're doing good. Unicorn Queen, happy Sunday. Glad to have you. Vale, hello. Greetings from Nigeria. Hello, hello. Shout out to Nigeria. Got a lot of folks on my team from Nigeria. Awesome place, awesome place. Cyclops, my man. Eslam, hello, Dylan. Hope you had a great weekend. Sure did. Hope you did as well. Reaper, good to see you. It's great to be here, guys. Frank, my man. Hello from Germany. Awesome, awesome. Joe, what's going on, brother? Glad to have you. Lucian, hola. All right, guys, let's get into it. Appreciate you guys joining us here today this Sunday. And as always, it'll be worth your time. Let's get down to it. And then last time I want to say this, a lot of times I forget. If you guys can do me a favor and hit the like button for me, if you're getting some value, getting some insights from here that are going to help you going into the new week, be sure to smash that like button for me. Helps myself, my team out greatly. Doesn't cost you anything, just the time to click the button. Would greatly appreciate that. So let's get into it. The weekly forecast from November 17th, 2024. So the economic calendar this week, a bit light. We do have higher impact news Thursday, Friday. And again, coming off the week that we just came off, we just had CPI, PPI, and then the week before that we had the elections. So a lot of heavy hitting news is behind us. And again, because that's already happened, that's why I'm suspecting we're going to see the cleaner price action going forward. But this is also going to be confirmed on the charts with the technicals. And you're going to see exactly what I mean with regard to cleaner price action and better price moves are anticipated going forward. As always, the specifics around the economic calendar each day, when the best trades are going to form. Again, that's all going to be covered in our weekly newsletter, which is sent out just about every Sunday, 8 p.m. sharp. So if you're not already subscribed, you definitely don't want to miss out those insights, especially if you're an equities futures trader. Hello from Kenya. Awesome, Ronald. Peter, liked. Thank you very much, sir. All right, so the assets we're going to be looking at today, we're going to be looking at the US dollar, the Treasury bonds, and the NASDAQ 100. One thing I also wanted to mention, I just realized there's actually quite a few stock traders that follow our channel and what it is that we're doing. For stock traders, everything that we look at with regard to trading indices, which is what I specialize in, is going to be absolutely helpful for you. Because what you'll learn is over time, all boats rise in high tide and all boats fall in low tide, right? So for stock trading, you absolutely want to know what the equities and index futures are doing. All right, so let's get into the intermarket analysis. As always, it's not enough for me to just look at the asset I'm trading. I want precision, I want to know why, and I want to be able to trust what it is that I'm looking for. So this is why we use intermarket analysis. We look at the US dollar, Treasury bonds to confirm what we're seeing in the dollar, and then from there we go into the assets we trade, foreign currency, commodities, and stock index futures. All right, so looking at the dollar monthly chart, get right down to the business. So after nearly 2 years of consolidation, dollar looks to be expanding out of the range. That's extremely influential because if you've been trading Forex for the past few years, it's probably sucked. And this is why. Zoom out. Monthly chart's been in a consolidation. Not a whole lot of action going on there, unless, of course, you're in Adora Trading's network, and we've been calling this thing up, down, sideways all year long and last year as well. So just because it's consolidating, it doesn't mean there's no precision elements. It just makes it a lot more difficult to see clean, sustained price runs. So for those of you guys that have been trading Forex, it's been a bit more difficult. This is why. Luckily, I got some good news for you. I'm expecting that we're going to be seeing cleaner price action in the Forex market, especially if we leave this consolidation, right? So what I have labeled here is the low and the high of the current dealing range that we're trading within. The market was held here at equilibrium. I'm looking at this as accumulation in a discount for the next leg higher. Let's not get ahead of ourselves though. While I am looking at 114 as a longer term target, where are we at right now going into this week? Well, we just had these buy stops delivered here, and then we have these buy stops here at the 107.348. Above that, what I'll be watching, again, the buy stops remain the draw, and the buy stops are just the swing highs above market price. So buy stops remain the draw, then monitoring how we trade inside the imbalance will indicate if we continue bullish. What does that mean? Well, we have a fair value gap here. What's going to tell me we're going to get up into here? How we trade here at this level, right? So the buy stops have been delivered here, likely going to be delivered here soon. And then again, how we trade inside this imbalance is going to tell me whether or not we trade higher. So what I'd like to see is strength through that level, support, expand into the buy side. Weekly time frame. Institutional order flow is bullish, confirmed by the breakaway gap. We called all this real time on the YouTube channel. You can just go back to those live streams if you prefer to do so. So again, breakaway gap here, not something that we just see after the fact, things that we absolutely do anticipate. So imbalance here, left open. Institutional order flow is bullish, again, confirmed by all these imbalances that are unable to get filled, right? Imbalance here, 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 and here, unable to get filled, indicating the market is in a hurry to get somewhere. Why is that? Well, if we understand that the algorithm has two responsibilities, reprice the liquidity and rebalance inefficiencies. If the algorithm's unable to rebalance inefficiencies, what's that tell you? That it's in a hurry to get somewhere, and it wants to get somewhere with speed. Well, where would that be? Well, we have the buy stops up here, right? These relatively equal highs after the consolidation, and then they drop it. That engineers fund level traders to go short here. So if you can see that, then it gives you the easy draw on liquidity. So with that, now going forward, the weekly fair value gap here remains the draw, and what that weekly imbalance is going to be this candlestick's low, this candlestick's high, and that imbalance inside that range, right? Extending that through. I'm looking for this swing high here, which is also the low of that gap. That's interesting. And then from there, I'll look for lower quadrant, 50%, upper quadrant, and then the high. And then again, how we trade there will determine whether or not dollar has the legs to get up into 114.778. Measuring gap here, probably wondering what that is. So what I use measuring gaps for in my analysis is if I'm expecting dollar to trade to the 109, right? 109 is my draw right now. From where the price run starts to where I think it's going to end, I want to see an imbalance left open because I can use that as a measuring gap and trust we're going to get a measured move from this low to this high, and then that range can be duplicated to the upside. So that's what I mean there by measuring gap. So something I have there for my notes, for my reference, and just so you guys know how to use that information. And again, lastly, something you absolutely want to keep in mind is look at the strength of the price run, right? This is not something you want to short. This is something that is extremely bullish, right? So before I even go into bonds and equities, I already know I'm going to get the question from the euro and the pound traders. Can you look at euro? Can you look at pound for me? It's the inverse of the US dollar, right? And if you go to those assets, you will see that is the case. So if I'm calling higher dollar and bonds confirm that, then again, that gives us a pretty straightforward bias and a read on foreign currency. All right, daily time frame. So market maker buy model completed, beautiful delivery. And again, because we are higher time frame bullish, my analysis calls for continuation, right? So I'm not saying, all right, guys, we got the market maker buy model here that we called from all the way down here, and now it's over. I'm still looking at more upside because of what we're seeing on that monthly and weekly time frame, right? So just because the market maker buy model was completed, I don't think this show's over for higher prices for US dollar. And if you have any friends that are dollar bears, I would be sure to check on them. Relatively equal highs here, 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 they drop it. And then we walk the buy side of the curve like a dog, right? Imbalance here, institutional order flow entry drill. Trading down into here, imbalance, extend that through. We called that as an inversion fair value gap. Instead, if we're going to get up into here, this inversion needs to find support. It did, imbalance, expanding into the buy stops. So what I'm looking for is 107 and beyond, and then again, that weekly imbalance to the upside. What I prefer to see is this imbalance here, support price. Because we have three of them, I'd prefer to see it stay in the upper portion, reaccumulate, and keep expanding higher. That's going to confirm that this market is extremely bullish. Hourly chart. So keep in mind what this green line is. Let me show you on the daily chart, right? It's this high here. So dropping down to the hourly chart, that green line is that same high. So I see this as accumulation at the highs for the next leg higher, right? They take it higher than all-time highs, they hold it there, and I'm expecting this to be a next leg higher. Of course, as long as institutional order flow remains bullish, I'm looking for premium targets. And again, those have already been covered. We have the daily imbalance here, which is shown here on the daily chart. It's already traded down into it once. So ideally, if it's really bullish, it'll leave it, but it can come back down into that level, make a low of the week, and keep expanding higher. All right, getting into bonds, right? So if we're seeing higher dollar, what gives the dollar its value? Bonds, right? Because again, our currencies are units of debt. It's not what money used to be, where the dollar would be represented by a certain amount of gold, right? The monetary system we have now, it's fake. It's not real. It's monopoly money. So if we understand that, what gives the dollar and the currencies their value? You have to look at the debt market, bonds, treasuries, and the yields, because that's going to give you insight into why the dollar is going to do what it's going to do. And then you'll see, for those of you guys that are here studying, you'll see how all these things come together to give you pinpoint precision. So bonds, again, are extremely weak, making the buy signals in dollar easy money. Looking for continued downside to the sell side, which will provide more lift on dollar. What does that mean? So I'm looking for, I don't have the sell side marked on all the triad, but just for reference, sell side here. Here, I'm still expecting the market to draw down into that. This inversion fair value gap here that we used as a target when we were bearish was then used as inversion, still sending price lower. That's why we're seeing higher dollar. And now you're going to see how that translates into the futures market, which we're going to get into. Looking for continued downside again into the sell side, which will allow dollar to rally with ease. All right, daily chart, extremely heavy, right? Imbalance here, that's a breakaway gap. We like to see that first gap in the price run be left open. 3 imbalances here, 1, 2, 3. Unable to fill any of them, indicating what? This thing is dumping. Weekly inversion fair value gap, trade down, trades to the high. Beautiful delivery, smashes lower. We see the same thing here, and still seeing weakness on bonds. And again, that's going to make it easy for dollar to continue to rally as long as this remains constant. Alrighty, NASDAQ, weekly chart. So all-time highs, repriced to and rejected, indicating we could be seeing a top in the equities market. Man, never thought you'd hear those words coming out of my mouth, huh? Especially for the long-term members that have been with me all year. Based off what we've seen, right? All-time highs traded to, and then how we rejected it, I'm looking at this as a potential top in the market and looking for lower prices. So if it's going to be bearish, again, we still have to confirm it, right? It's just, we still have to have validation for why we're going to see a top and see lower prices. So if we're going to remain bearish, I'll expect the down close here to be disrespected and make a run for the sell stops. What does that mean? Well, this down close here, if we're bullish, down close, support, and we keep rallying. If we're bearish, we want to see, obviously, the opposite, right? We'd want to see it trade down to and through that level and make a run for the sell side here and here. And then longer term, we have equal lows down here and here, but we'll deal with that when we get closer to those levels. But just so you guys know, longer term, could be seeing a run for the sell side down here. And again, that would be confirmed as strength in dollar. I never thought I'd hear you say it. Yeah. Here we are, right? It's first time for everything. Let's keep it moving. Daily time frame. So here we can see again the all-time highs here traded up into. So buy side at the all-time highs rejected aggressively, indicating the market has seen a potential quarterly shift lower. Buy side taken. Market breaks down aggressively, creating a potential balanced price range here. I'd want to see this initial imbalance be a breakaway gap. This imbalance that we're trading in here, I'd want to see that used as inversion and see the market flush into the sell side here, 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 and here. What's significant about these lows? Well, if you look at this day here and you mark out 20 days back, 40 days back, 60 days back, these are the liquidity pools that exist within the data ranges as of right now. So if we have seen a quarterly shift, and we are going to see a sell program, which just means the market's attacking discount levels, discount inefficiencies, discount liquidity, or liquidity below market price rather, then we'd want to see what premium levels act as resistance, being a breakaway gap. Inversion, we want to see that respected. This, I'm anticipating becoming a bearish breaker, right? So I want to see us get down below this low, use this down close candle as resistance, and I want to see that be a bearish breaker. I don't want to see this act as a bullish order block. Equal lows here and here. Why do I like those lows? Because think about what's happened. This is the election candle here, where they shot it higher off the election when they put old Trumpster in office. What is, and we've been talking about this all year long, how they use the election to manipulate sentiment. So what was everybody and their grandma saying about the stock market and crypto? It's going higher. Everyone needs to buy the market. And there's nothing wrong with that. But if everybody's looking for higher prices because of the sentiment that's being manipulated, oh, Trump's good for the market, Trump's going to send the market higher. Well, look at where we're at right now. And one of the reasons why I say that is because you need to think, where's the money to be made? If everyone's looking for higher prices, who's left to buy it? And, you know, I make this joke. I was in the car this past weekend, and I was speaking with my girlfriend about the markets, and she was telling me about, yeah, you know, markets have been going up. You know, Bitcoin's doing really good, and she's the last person to ever know anything about Bitcoin. So when I know I have my girlfriend asking me about, are we long stock? Are we going to buy the stock market and buy crypto? All right, guys, shut it down. The top is in. This thing is going lower because there is nobody left to buy this market if my lady is asking me if we're going long. It's just uncanny how that works. And what was the bias Thursday and Friday? Bearish. What happened though? They took it higher, all-time highs. Breakout artists want to buy this. They hold it here. What's the narrative? The narrative is, if you look at the news, just open up any of them. Reuters, Bloomberg, CNBC, market's bullish. It's like in the Trump presidency, all those things. And what's that doing? That's giving uninformed money on the hook on the wrong side. And then look at how they smash it lower aggressively. And I'm expecting that to continue because of the sentiment, because of the narrative. So with that in mind, all of that explanation to share why we're looking for these lows here and here. Because what does this look like? A double bottom, right? Support. So anyone that went long and chased this run higher, where's their sell stop going to be? Here and here. And then how we trade there will tell me if, you know, if we're going to get down to these lows, this imbalance, and these lows here. So I don't want to get ahead of myself. The draw right now is these lows and this low here. So one of the things you always want to keep in mind from a sentiment perspective is you want to understand where's the money to be made by smart money, right? And if everyone's long, then the money's to be made on the downside. So again, weakness in the index futures is also confirmed by the risk-off dollar. So this is something I've been saying for a long time. Recently, we haven't had the same correlation with bonds, dollar, and the equities market. And that's been something that's made it a bit more difficult for me because generally I rely on all those tools, which is why my risk has been sized down so significantly for several months. Now that we're starting to see cleanness come back into the market, we're starting to see higher dollar, lower equities, bonds moving the way they're supposed to. This is why I'm suspecting we're going to get cleaner price action, because now the markets are moving in agreement with the fundamental side of things. And you guys know the way I look at fundamentals is all chart based, right? The bonds, interest rates gives insight as to what we're looking for in commodities, equities, and foreign currency. So if this gap can be left open here, treated as a breakaway gap, we're not going lower, but we're likely going much lower. Also, why do I have the Fibonacci here? Just to highlight the 50% of that imbalance, because it's also significant that we traded down through and closed below 50%. Right? That's very significant, and that's actually what gave us the bearish bias on Friday, because what did we do on Thursday? We traded down to and through, closed below 50% of this gap, indicating it's weak, and then it rotates lower into the sell side. So this bullish breaker here, low, lower, low, up close candle, I'm not expecting that to act as a bullish breaker. Again, if you've been with me for any length of time, then you guys know I don't promote pattern trading. I don't promote, oh, look, there's the fair value gap. It's time to go long. Oh, look, there's the unicorn. It's the fair value gap with the breaker. It's all about narrative, because if you understand where the market's drawing to, then you're less likely to fall victim to wanting to go long a breaker that's not likely going to work, right? All right, moving right along, 4-hour chart. Looking for a market maker sell model to be completed to the downside, right? As institutional order flow is heavy. Fake bull flag for smart money distribution of longs, right? We have all-time highs here. The market trades up into the all-time highs and it does what? It consolidates. What does retail see there? That's a bull flag, right? That's time to go long. It's time to buy the market. And I'm not saying from our perspective, from a uninformed money perspective. Oh, look, it went higher. Trump's president. There's a bull flag. We broke resistance, right? Resistance here traded through. Now that means what? The market's really strong because resistance was broken. Oh man, and now it's giving us a bull flag, so we're going to see another leg higher. I'm not making fun. This is what gives myself and my team real precision, right? And if it hurts anyone's feelings, then that's something you're going to have to sort out. Equal lows here, equal lows here. Strong draw on liquidity for the market right now, especially considering that these imbalances here are being left open. And then we slam lower, creating two imbalances. So what I'd ideally like to see is the market be sent lower from this fair value gap, create a high of the week, and start to smash lower. It can trade up into this one. It just wouldn't be as bearish for me if we did that. I want to see it be in a hurry to get down to those lows because, again, there's a lot of sell-side liquidity here and here for the market to want to tear down into. All right, I think that does it. Short and sweet. All right, guys, any questions for me before I get going? It's been a long weekend and there's no rest for the weary. Still got quite a bit to do here today. So what do you guys want to hear from? Hear about, rather. Ronald, please break down how to use the 30, 10, and 5-year interest on the daily chart. So one of the ways that I use it is from a fundamental standpoint, meaning what should we see in dollars? Should we see higher dollar or lower dollar? That's going to be determined and predicated based off what we're seeing in the bond market, right? So if we're seeing heavy bonds and treasuries, what does that mean for the yield? So this is something that you can also look up on the internet. That's what I had to do. It's quite a bit of research, but if you want to know the why, they don't make it easy for you to learn this. So saying that to say, I'll give you the Cliff Notes version here for everyone that wants to know. This isn't going to be as detailed as I would obviously if I was mentoring, but it'll be good enough to give you solid insight into what you should be looking for. So what we're looking at here is this is the actual treasuries itself, like the actual bond itself is the treasury. When the value of the treasury drops, the yield goes up. If the value of the treasury bond goes up, the yield goes down, right? So let's say we have lower treasuries. What does that mean for the yields? Yields are going higher. Yield for what? Whoops, 1 second. The yield for what is going higher? The yield for owning US dollar. So the 10-year, let's say you buy a 10-year bond. What percent interest is that going to yield? 4.5% interest, which is much better than where we were at when it was offering 3.6% interest. And now this is much more attractive for investors to buy. Why? Because it's giving a higher yield for owning US dollars. So as the yield goes higher, it's a more attractive investment from big players, from big investors. So how do they take advantage of this? They need to move their money into the US economy, into the US dollar. So if yields are trading higher, dollar going to be trading higher as well because institutional money is piling into that asset class. Why? Because they can get a higher yield than they could in other currencies. What are we seeing in euro? It's getting smashed. Pound, getting pummeled. Australian dollar, cratering. New Zealand dollar, cratering. What's happening there? Money is leaving foreign currency and going into US dollar. So for currency traders, you need to know your stuff. You need to know what's happening, why it's happening, and it's not that complicated, right? But it does take the time to do the research and understand what's happening and why it's happening. So there's a introduction to some economics here, 101. Hopefully that helps you out, Ronald. And that is a more basic explanation. There's a little more behind it, but that's enough for you to hit the ground running and at least have a foundation for what it is that you're doing, what it is that you should be looking for. Hopefully that makes sense. Jesm, hello, hello. Trade the range. So $1 will always be around €1. There's much exchange between the two on a daily basis. Yeah, while that's true, if you go back in time, right, it's been a very difficult trading range for dollar. But if you go back in time, especially if you look at and this is even before I was trading, but if you go back to early 2000s when the Forex market was really moving, I mean, man, this looks like index futures. So there is lots of movement. There's lots of opportunity in the Forex market, right? And you can see lots of ranges, expansions, but it just depends on the market profile, right? Right now we're in consolidation, or we've been in consolidation, but then the market also enters periods of expansion where it's running to liquidity. So it just depends on the market profile that we're in. If you started trading in the last couple of years, then I could see why one would say that, it doesn't move a whole lot, because from your experience, that's true. Alrighty. Never thought I'd hear you say it. Yeah, yeah, about the top. Yeah. Can you explain risk off NASDAQ and dollar when you have the time? Absolutely. So same thing with foreign currency, right? I've already covered bonds, dollar, why that's significant. Well, if we have higher dollar, what does that mean? Investments are going into dollar, which is a risk off scenario. Money is seeking safety in the US dollar. So if it's seeking safety, there is no money heaven. Money has to come from somewhere and go to somewhere else. So if money's pouring into the dollar, where is it leaving? Well, we've already touched on how it's leaving foreign currency, but also equities market. Whoops. Also the equities market, right? So that's why I'm expecting rotation lower in the equities as well, because that's going to support the bias that we're seeing on the US dollar, right? So if money's going into dollar, it has to be coming from other places, right? What is gold doing? And Tommy, really nice call on gold. I know someone in the community was asking about gold, where gold was going, and they were potentially looking at some form of SMT to the upside. But if dollar's bullish, forget about it. It's going lower, right? So if money's going into dollar, where's it coming from? Gold, foreign currency, and drawing a blank, the equities market, stocks. The girlfriend indicator. Damn, give us single fellas are at a disadvantage. Well, what I've learned is you can also get the same reading online. Like if you go on, just open up, I think the financial Twitter, I think they call it FinTwit. Open up your financial Twitter. What's everyone talking about? Man, long Tesla, long Bitcoin, long all these things. And then there's just all this craze about, man, meme coins, crypto. And I'm not saying, it's a bad investment long-term. Everyone has their own thought process behind it. But if you're seeing everyone wants to buy a market, right? And then there's this feverish pitch. It's almost like what we saw back in, hold on. Let me go up to a weekly chart. Zoom out, get my bearings here. It's almost like what we were seeing here in November of 21, right? Everyone was doing what here? Calling for $100,000 Bitcoin, $100,000 Bitcoin. And can we get that? Sure. But it feels like a lot about where we were at that time here, where everyone was calling for higher. Everybody wants to buy it. And then obviously at that point, that's where smart money is going to accumulate shorts and reverse it down to the other side, because that's where the money is to be made. So I have that same feeling with stocks and equities right now as well. And those are just factors that I'm considering. If I'm wrong, we'll pivot, adjust, and then I'll go from there. But that's what I'm looking at right now within my current bias. However, like I was saying though, you can still get the girlfriend indicator through Twitter, social media, go into different chat rooms, live streamers. There's a lot of ways you can get that information and see what uninformed money's perspective is on the market, because it's so valuable in aiding me in my bias, my analysis, and allowing me to trust what it is that I'm looking for. Because if you can't find the losing traders, then you're probably going to be the losing trader. And that's a simple motto that has helped me a lot in my trading. Joe, dollar higher, lower indices? Yes, sir. Taj, thank you. Peter, BTC. Yeah, this took a peek at Bitcoin. Right now, Bitcoin's at all-time highs, and I'm bullish until proven otherwise. There's nothing in this market as of right now to indicate it's topping out or it's running out of steam. So keep looking for your buy models in Bitcoin until we get indications that it's weak. Something to monitor this wick here. See how we're staying in the lower portion, right? If we continue to do that, that could give us a nice acceleration to the downside. And that's something I use consistently. Like I used it this week to call NASDAQ live, calling it lower Thursday, Friday, because we had this wick here at the premium. We couldn't even get up 50%. So little algorithmic clues like that tell you the market's really heavy. So same thing you can do in Bitcoin here. Joe, crude oil. Yes, sir. Let's take a look at crude oil. Yeah, crude oil's been sloppy. A lot of back and forth. Make it a bit more difficult to call. Right now, what I'm looking at is the equal lows here, here, and here. But before we get to this low, because we've been in a consolidation, don't demand it has to trade to that low. Use this wick, split it in half. So first target would be this low, which doesn't give a lot of range. But if we accelerate through that, we have this low here. Midpoint of that wick. And then if we accelerate through midpoint, how we trade there will tell us whether or not we get down into the lows or not. Daily time frames, really sloppy market just because everything going on in the world right now. Run on buy stops here. So the buy stop's been taken, it's broken down. Shifted market structure. We've traded into this fair value gap. Couldn't even fill in up to the midpoint, indicating it's heavy. Rotation lower, equal lows here and here, equal lows here. And then again, if we accelerate, want to split that wick in half as a target, and then potentially the lows if it continues weak. But as long as this remains open, I suspect we're going to see a flush to the downside on crude oil. Ronnie, can you do the correlation between NQ and ES? Okay, gotcha. Yeah, it's going to be the same thing. So for NQ, right, everything we talked about, in my mind, the same applies to S&P. So I'm looking for the same in ES. What we're looking for is how we trade inside this imbalance here. Ideally, I would like to see us close below, but what you'll notice, and these are little clues that over time experience will teach you how to know what market's better. The reason why I like NASDAQ lower over S&P is because it's in a hurry to get down to those lows. What tells me that? It closed below this gap's 50%, whereas S&P was unable to do so. So S&P is still bearish because they're going to move together. And now what do we have here on S&P? Smooth lows, right? So on the election, they pump it higher, get everyone to think what? Market's going higher. Market is bullish. And it could still be bullish, right? It very well could be. And if I'm wrong, then I'll take in that information and pivot as I need to. But if we start to accelerate down through this imbalance, what's the draw? These equal lows, right? Because where's everyone's sell stop going to be at in their long position? Here below the smooth lows. So you can take essentially what I'm looking at in NQ and apply it to ES. But if you know how to read into the clues, then you'll be able to know which market is better to short, which one's better to long, and then that'll give you more flexibility on that side of things as well. So same thing for the E-mini S&P. Down close candle here, you'd want to see it trade through it, so it's going to be the same business. Martin, do you expect a small range day on Monday because of the economic calendar and daily candles from Thursday and Friday? Really good question, Martin. Let's check it out. So we've had a large down candle Friday. So generally after large range days, we get small range days. Good job there. One thing to keep in mind, because we saw no TGIF on the week, we could look for Monday to potentially deliver that. So if Monday can deliver the TGIF, that would be something I'd be looking for. But because it's a Monday with no news after a large range Friday, my expectations are going to be managed. So expectations are managed, and it means it could be a small range day. So we're playing the probabilities, but one of the things I'll look for potentially may be a run into the TGIF. But those are all things that we'll have to weigh out when we get to the open at 9:30, because then at that point we'll have a lot more data points. We have the regular trading hours gap, new week opening gap, all tools that myself and my team use all year long to absolutely crush it on no news Mondays. So some things to consider there. That will give you more than enough for a Monday session. So keep in mind the TGIF, you absolutely want to have your regular trading hours gap on your chart and your new week opening gap, and you're going to see a whole world of magic open up to you. Pretty clear analysis. Looking forward to a new week. Absolutely. Absolutely. Pretty straightforward. Foreign currency, pound, New Zealand dollar, GBP, NZD, forex.com. Yeah, so I'd be careful with the exotic crosses, simply because dollar's in expansion, right? So because the dollar's expanding, that's going to make, one second, GBP, NZD. Going back to the forex days here, it's going to be really hard to see a sustained price run in the exotic currencies because right now the dollar's moving directionally. If dollar does enter a consolidation, that's where you're going to notice the best price action for the currencies, or for the exotic crosses. Right now, from a weekly perspective, yeah, so weekly perspective, we appear to be bullish. What I'd monitor on pound, New Zealand dollars, how we trade inside this volume imbalance. Ideally, we'd find support there if bullish. We do have equal highs here and here, but right now it's really sloppy. There's nothing clean about this market structure because look at this imbalance that we're in here. You see how much time it's spending there? That's a really shitty market condition. And if you compare that to something like dollar, trades down, hits the imbalance, explodes higher, right? We want to trade markets that are energetic, that are in a hurry to get somewhere. So just some caution there on GBP, NZD. And the reason why I say that is because I don't just want to say, I'm not sure. Because if I'm not sure, I want to give you a reason why. Because here's the thing. If I called markets in low probability, then I wouldn't have the same precision that I normally do. So that's why I share those details. Hopefully that helps. Based off what we see in NQ, this means indices starting to bend the knee for dollar. Exactly, Aslam. And that's a really good point that you bring up, because for the longest time, we've been having to trade higher equities and higher US dollar. However, now, during that time, remember what we'd always be saying. Right now, they're both going higher. We have to trade what the market's giving us. Longer term, though, strength in dollar will cause the equities market or indices to bend the knee, which is essentially what it is that I think we're seeing right now. And then we'll have that confirmed going into this week. All right, guys, I'm getting hungry. I need to get going. Gold, yeah, let's take a look at gold. So gold's weak, looking for lower prices on gold, especially considering that we're seeing strength in US dollar. Need to go out to the monthly. So longer term, like monthly chart, gold is still bullish. Monitor how we trade inside this monthly imbalance here. Because if we continue to sell off, then we'll see lower gold from that monthly fair value gap. Weekly chart, looking weak, right? Gap here completely overlapped it. So in my mind, I'm looking for lower gold. We have this imbalance. If we get through that, we have sell side here. Small imbalance. We have this wick. You could split that in half. And then those could all be levels that you use on the downside. If it really starts to flush, then we have the sell stops down here at the 23,000 level. I'm not co-signing gold going to 2,300. But those are things to monitor. And if we do accelerate with strength in dollar, then we could easily see that. However, because gold is so sensitive to what's going on worldwide, lots of wars, political unrest, fear that with the currency, with the US dollar, just a lot of things going on, that things can change really quickly with gold, right? So if things start happening in the Middle East, things start happening with countries and currencies being destabilized, then gold can turn on a dime and just continue ripping higher. So some things to consider on gold with the current climate that we're in. Maysel's great explanation. I appreciate it. Are you using a PC for your trading? Yes, sir. I use a MacBook that I connect with one monitor, and then I have a PC that I connect my other 4 monitors to. Kevin, what is TGIF? Awesome question, man. Looking at the NASDAQ here. So generally what we look for in a candlestick, and this will be the last question. So generally what we look for in a candlestick is an open, and in this case my candles are blue. We expect an open, a low, a high, and a close. Generally what we look for is this is more so for predicting how far the market can retrace and where it's likely to close. So what we do on the TGIF is we measure the candle's low to the high of the weekly candlestick. And then what you get on your fib is you get the 0.3, 0.2, because that's going to give you respectively the 20% and the 30% of the weekly candlestick. So once we reach a key high, that's key, right? We need to reach a key level Thursday going into Friday. If we see the market reaches a key level Thursday going into Friday, then we naturally expect this candle that's a body to trade lower and close off that low. How far can it close off the low? 20 to 30% is what we look for. So it's a model created by ICT called Thank God It's Friday, because it's a model that forms on Friday. And this is the logic behind how that works and how you can use it. So pretty straightforward once you understand what you're looking for, but it's a model that we look for Thursday going into Friday. However, if Friday does not give that run lower, that retracement, then generally that's something that we could look for on Monday. Like button, thank you very much. Alrighty, guys, great questions. You guys got me answering some good questions today. Appreciate you guys joining. Appreciate you guys' excellent questions. I will see you guys on the next one. And speaking with my team, may look to do some live trading on the YouTube. So with that, I'll let you guys know about any updates we have there. What are your views on settlement? Something I use every single day. You've got to know where we're opening at 9:30, and you have to know where we settled the previous day. If you don't have that, in my mind, you're playing a very dangerous game trading this market and not having that information, because there are people that do have those advantages. And I'm not saying you need it to be profitable, but it gives you a big advantage if you know how to use these tools. With that, guys, I'll see you on the next one. Enjoy the rest of your Sunday. Take care, and I'll see you guys on the next one. Catch you guys later. See you guys. Thank you, Lotus. Thank you, guys. Take care. Can you do a teaching about the Judas swing? That's a good one. That's one I like that. I'm going to have my team write that down, or I'll write it down and talk to my team, see when we can get that implemented. I like that. Something I use every day, and I think that'd be a phenomenal teaching to go into for the YouTube. So with that, guys, I'll see you later. Take care. Have an awesome weekend.